Look, at the end of it, any business or economic slowdown can have an impact in terms of the demand for credit. Recognising that in Australia, though, that most credit is provided by the banks, it's still a very large market. And so for us, I think we're the largest non-bank private debt provider in the Australian market at around $15 billion. That's dwarfed in comparison to the size of the market, which is around about 1.1 trillion. So certainly we have the opportunity to be very selective in terms of the kinds of companies and projects that we agree to finance. But we believe that credit growth will still grow at sort of 5 to 6% per annum, still provides opportunities for us to originate good quality transaction opportunities. But importantly, when you get a situation where business or economic conditions deteriorate, all of the protections associated with appropriate covenants, appropriate controls, ensuring that equity wears that risk of first loss, ensuring you've got appropriate security to mitigate your risk of loss and give you multiple ways in which you might exit your exposure, are all designed to mitigate risk of loss. And so again, as a lender, what you're looking to do is not take the risk that the company is going to generate huge increase in value or earnings. That's an equity opportunity. And so when business or economic conditions deteriorate, what you tend to find is that top line revenue becomes more challenging. Companies need to respond in terms of aggressively attacking their cost base, but also as a result of rising interest rates, alternative asset classes become more interesting or compelling from a valuation perspective. So in an environment where equity upside looks less appealing, investors tend to focus in on, well, how can I generate an acceptable income, preserving my capital? And I believe that private credit does provide that opportunity. And also with a team that have got a strong skill set in corporate restructuring and workout, you can manage through the cycle. And our team have, strong track records and backgrounds going over many decades of experience in terms of different cycles and how that's evolved and the risks that may present to a lender.